Good day, Junior Techies. I'm Mrs. Brimacombe. We're going to look now at Budgets Activity 2. 2.1. From the list below, choose the words that best suit the description below. Only write the words next to the question number 2.1.1 to 2.1.5 in the answer book. Question 2.1.1. Expected future payments to suppliers will happen in the creditors' payment schedule. Number 2, indication of whether there will be sufficient inflow of cash to be able to support expected payments in the cash budget. Estimated future receipts from customers are calculated in the debtors collection schedule. Number 4, an item that appears in the projected income statement but not in the cash budget, discount received. Indication of future revenue and expenses or expenditure will appear in the projected income statement. Question 2.2, Big Traders. The following information relates to the budget period from 1 October 2022 to 30 November 2022. Question number 1, required. Complete the debtors collection schedule. Number 2, complete the creditors payment schedule. Number 3, complete the cash budget for October and November 2022. Number 4, name 2 items from the cash budget in question 2.2.3 that will not appear in the projected income statement. So this question, you cannot just answer anything, give any answer. It must be based on the cash budget that you've completed in 2.2.3. Number 5, give 2 reasons why it's important to compare actual figures with budgeted figures. And number 6, you have noticed that the actual motor expense, vehicle expense for September was 7,200 more than the budgeted amount. So here we're looking now a little bit more in detail. Actual figures that must be compared to budgeted figures. And then we need to comment on that. So if we look at 2.2.1, the debtors collection schedule, it's asked a little bit different than the previous question. In this activity, they provided some figures to you on the answer booklet. Now, please remember, it says here the total sales. They provided the figures for July, September, and November. 40% of total sales is cash. When figures are given to you on an answer booklet, do not change the figures which is on the answer booklet. Don't go and calculate, well, 40% of total sales is cash, which means 60% is on credit. So now they've given you July, but that wasn't required in the debtors collection schedule. There's September. Don't go and calculate 302,000 and times it by 60% to see if you get the same answer. Because it could happen that there's a mistake in an exam or in a test. Do not change the figures on the answer booklet. We will mark accordingly. So, completing the debtors collection schedule now. I'm going to look at my workings again, starting with the figures which is given to me in information A. I know it's not required in the debtors collection schedule because it starts from August, but I'm going to start from July and I'm going to work my way through up to November based on how the debtors pay us. We expect the debtors to pay us. If we look at what the debtors are expecting to pay us, 35% in the month of sale, 55% in the first month after the date of sale, 8% in the second month after the date of sale, and 2% is written off in the third month after the date of sale. So where do we start now? We start first by finding out the credit sales. To find out the credit sales, if 40% is cash, it means that 60% is on credit. So every time you want to calculate the credit sales and they provided the total sales to you, you're going to times that by 60%. Starting in July, we're going to take the total sales times 60%. The credit payment by debtors or payment from debtors is expected 35% in the same month 55% in the first month after the date of sale, and then 8% in September. 2% is written off as bad debts. Now, why am I writing that in a different color and showing bad debts? That will not appear in your projected income. That will appear in your projected income statement. It will not appear in the debtors collection schedule. Bad debts is a non-cash item. We've decided that we're not going to recover 2% of the total credit sales in July. So we expect to write off 2% in October. If we look at August, 35% in the same month, then 55%, 8%, and then 2% is written off in November. If I look now at August on the answer booklet, it's unknown, we need to calculate it. If I look at the information, August is a question mark. So what now? There's a reason why they provided that figure to you. They said 14,400 is expected to be collected in October from the August credit sales. So if I go down to my workings, there's October. From the August credit sales, we expect 8% to be collected. So to find out the credit sales, we're now going to take the amount we expect to collect times 100 divided by 8. And that equals my total credit sales, 180,000 for August. There's no calculation in November. In November, 2% is written off as bad debts. That will appear in your projected income statement. For September, 35% in the same month, October 55%, November 8%. So for my debtors collection, we're going to take the credit sales times 55%, the credit sales times 8%. For October, 35% in the same month, and then November 55%, which means in the same month, take the credit sales times 35%, and then times 55%. Again, credit sales times 55%. For November, they provided to us the total credit sales. 35% will be paid in the month of sale, which means we're going to take 219,000 times 35%. Once we've completed the debtors collections for each month, we can work out the total that we expect to collect from October and for November. Now, this is just an added question. Wasn't required in this activity, but if you were to ask, calculate the bad debts that should be written off in the budget period. Now it becomes really simple because I've done the workings. There's October, there's November. That's our budget period. So to find out the bad debts, there's the 2% from the July credit sales and there's the 2% from the August credit sales. So this is just one reason why I do this part in a block. You don't need to do it this way. It's just a tool that you can use in help you getting this 100% correct. And in a test and an exam, only use this so much detail if it's required, if they've asked you these type of questions. My creditors payment schedule. This is what was given on the answer booklet. So on the answer booklet, they want you to calculate the sales, the cost of sales, the credit purchases, and then to find out the payment to the creditors. If we look at the information, the business uses a constant markup of 25% on cost. A fixed base of stock is maintained. 50% of all stock is paid cash. Creditors allow credit of 60 days, but allow a 5% discount if outstanding balances are settled after 30 days. The business always take advantage of this discount. So we do have 60 days to pay. But as a business, we decide that we want to pay them in 30 days or after 30 days so that we can get discount for early settlement. So the business is taking advantage of this. Now, reminder, I need to find my cost of sales because a fixed base of stock is maintained, which means that whatever we have sold, we're going to replace so that we can maintain that fixed base. So whatever we've sold, we need to look at our cost of sales. And that's why the markup percentage is given to you. Because I need to use the markup percentage to find out the cost of sales, to calculate it from the sales which was given to us. Sales, not only cash, not only credit, but your total sales. So they provided July, September, and November. August and October was a question mark. So to solve this, we need to go back to the debtors collection schedule, which we've completed. In the debtors collection schedule, we said August, the total credit sales was calculated by taking 14,400 times 100 divided by 8. Now, once we've got the credit sales, we can calculate the total sales. To find out the total sales equals 100. That's why we say times 100 divided by 60. And the same will need to happen for October. In October, we've got the total credit sales. They did not provide the total sales, which means we need to calculate it by taking the credit sales times 100 divided by 60. That equals the total sales for October. To find out the cost of sales, the markup percentage is 25%. So every time we're going to use the sales figure times 100 divided by 125. This must happen for July, for August, September, October, and November. So each time, take the sales times 100 divided by 125. The next step is to find the credit purchases. Now, 50% is cash, which means 50% of purchases is credit. We need to use the total cost of sales, and every time we're going to times that by 50% to find the credit purchases for each month, for July, August, September, October, and November. To calculate the payment to creditors, we pay them after 30 days, although we've got 60 days, so that we can get a discount of 5%, which means that we're only going to pay at 95% of the total outstanding amount. This means if we purchase on credit in September, we are going to pay 95% of that amount in October. In November, we are going to take the total credit purchases of October, 124,800, and we're going to times that by 95% to find the payment to our creditors. So completing now the cash budget. The first thing that I do is I'm going to use the answers from the previous two questions to complete in the cash budget. Starting with cash sales. 40% of the total sales is cash. 60% is on credit, which means that we can use the debtors collection schedule. We're looking for November and October. That was given to us on the answer booklet. So we can use that by taking the credit sales times 40, because that's the percentage cash, divided by 60. Alternatively, you can use the creditor's payment schedule. We've calculated the sales for October and for November, so then just take those figures and times it by 40%, and you will get exactly the same for October and for November. Cash from debtors, from the debtors collection schedule. Make sure that you use the same answers. Don't go and use different answers, because then you're going to get it wrong. Cash purchase of trading stock, 50% was credit, which means 50% was cash. So we can use the same figures that we've calculated in the creditor's payment schedule. For October, 124,800, and for November, 146,000. Payment to creditors, the same as with debtors, make sure you use the same figures which you've calculated in your creditors payment schedule. Do not go and show different amounts. Looking now at information number C, sundry expenses are expected to increase by 5% from the 1st of November 2022. So they've asked it now a little bit differently. By giving you the figures for November, it means I need to work out the figures for October. So it's working backwards. If a 5% increase was given, to work backwards, we need to take after the increase, which is 16,380, and then we're going to say times 100 divided by 105. Salaries and wages total 504,000 per annum. Employees are entitled to a 6% increase commencing in September 2022. So step number 1, find out the total or the monthly salaries and wages. Take 504,000 divided by 12. Then 42,000 times 106 divided by 100 will provide us with the salary amount after the increase. So when is this happening? This increase is happening from November, which means that the salaries and wages for October will be 42,000 and for November 44,520. Number E, motor vehicle expenses are allocated 14,500 per month. This includes the depreciation, which amounts to 4,500 per month. So it's allocated 14,500. You should know immediately. Depreciation is an expense which is not a cash item, so it does not appear in the cash budget, which means we need to exclude that. Take 14,500 minus 4,500, which means that the motor vehicle expense that goes into the cash budget is 10,000 per month. Number F, the business has a loan of 340,000 at Finland Bank at an interest rate of 12% per annum. The monthly interest is paid on the 25th every month. Take into account that 50,000 of the loan is due to be paid on the 1st of November 2022. So this means that we need to budget in our cash budget, that we expect a loan repayment of 50,000 in November. But now we need to also budget for the interest that we need to pay on that loan. So to calculate the interest on loan for October, we have to take 340,000 times 12% times 1 divided by 12. That equals the monthly interest for October. But to find out for November, we're going to pay 50,000 from the 1st of November. So for that month, the loan will be expected to be 290,000 times 12% times 1 divided by 12. So that's the interest on the loan for November. The next one, an investment is due to mature on 31 October 2022. The business is expected to receive this amount together with interest at 15% per annum for the last 3 months in October. So this is now asked a little bit differently and it's a bit challenging. Now, I need to find out what is the investment amount that will mature. So now they've provided the interest on the fixed deposit amount to us. And remember, it says it's for the last 3 months. So if I want to find out what was the fixed deposit amount, we need to find this out by using the interest times 100 divided by 15, because the interest rate was 15%. And then we're going to say times 12 divided by 3, because that represents interest for the last 3 months. So the total investment was 100,000. And that will be the fixed deposit. If it matures, it means that is what we expect to receive from the fixed deposit. Number H, the bank had a debit balance of 5,248 on 1 October 2022. So it means that bank debit balance, favorable balance. no brackets. This is the balance at the beginning of the month. Next step, add the total receipts, then the total payments. Total receipts minus total payments equals cash surplus or deficit. If the total receipts exceeds the total payments, it means that we made a surplus. Plus the opening balance equals the bank balance at the end of the month. Closing balance at the end of this month is my opening balance the following month. Now we can calculate the total receipts, add the total payments. Receipt minus payments equals cash surplus or deficit. So what happened in November? The total receipts is less than the total payments, which means that we have a deficit, and a deficit must be shown in brackets. To find out the closing balance, we have to take minus 48,254 plus 102,818. So we still now have a favorable bank balance at the end. Although we made a deficit, why do we have a favorable? Because the previous month we had a favorable bank balance, which was a huge amount, 102,018. Now 2.2.4, remember it says name two items from the cash budget in question 2.2.3. This means we need to look at our cash budget that we've just calculated or completed. Which of these will not appear in the projected income statement? If I look at my options, cash from debtors will never appear in a projected income statement. Fixed deposit, matured, think about it in this way. Bank would have been debited, fixed deposit is an asset which is credited. It's not an income, it's not an expense. Cash purchases of trading stock will not appear in a projected income statement, and payment to creditors, no. The same as with loan repayment. So these are all my options that I could have written down. They said only mention two. So any one of those, any two of those would have been acceptable. Cash sales is another option. Why? Because the total sales appears in your projected income statement, not only the cash sales. So just be aware of that. Cash sales will appear, but it's also your credit sales. The total sales appears in your projected income statement. I think to avoid confusion, let's rather say cash sales will appear in your projected income statement. Credit sales will also appear in your projected income statement. It is your total sales. So let's take, for example, if the business has no credit sales, everything is cash, then it means what is in the cash budget, cash sales, will also appear in your projected income statement. 2.2.5. Give two reasons why it's important to compare actual figures with budgeted figures. To assess whether the forecasts are realistic, to improve future forecast, to identify and investigate if there's any deviations, for effective cash and profit control, to determine the effectiveness of current controls. So these are all options that you could have written. Then number 2.2.6, sorry about that. You have noticed that the actual motor vehicle expense for September 2022 was 7,200 more than the budgeted amount. Suggest two possible explanations for overspending. So now we're just looking at, we did spend more than what we budgeted for. So two possible reasons could be: one, unexpected increase in fuel prices. Remember, there are things that is out of our control, which will impact the fuel price. And if fuel prices goes up, that will impact our business, for example. Emergency repairs that should have been done or taken place. There could have been abuse of vehicles by personnel, by staff. Unforeseen increase in sales to be delivered, which actually would have been a positive. If our sales increased and we had to do more deliveries, that is a positive if we've overspent. And that's what we're going to look at later on. For example, if we've overspent, but we've done deliveries to customers and our sales also increase, then that's a positive. Then it's not a bad thing. But what happens if our sales actually decrease and our deliveries to customers, that vehicle expense for fuel went up? Then it means that there is a problem. Because if sales were less, then why did we spend so much more on fuel? So these are the things that we're going to look at. Now it's important to understand that we need to compare actual with budgeted, and you need to think of different reasons why it could potentially happen. Thank you very much. Next, we're going to look at activity 3. I want to leave you with this quote. Road to greatness is never smooth. Path to success, always rough. The journey isn't always attractive, but refusal to embark on it amounts to failure. I hope you have a wonderful day.